agreement to acquire 53% stake in Polaris. CNBC TV18's Jude Sannith caught up with the chairman.
I think it's a strategic plan which we put together in 2012 that we have two businesses. One is a product business, one is a services business of outsourcing, and I have to make a decision of where my heart is and where is the mind is. So one has to take a differentiation. So heart is always a clutter of emotions, where I mentioned, and clarity of thought comes from the perspective what is right for the people, what is right for the customer. And I think the clarity of thought has brought in this deal, because this Virtusa Polaris combination is that combination where the specialist players are coming together in banking and financial and other industry segment with Virtusa, where we can give the expertise right to the customer, and for the associate they get a larger canvas of $800 million today. It's much more closer to $1 billion. So it's our dream to reach fast, and it's a global requirement for major financial institution when they're looking for outsourcing budgets, larger outsourcing budgets, to be qualifying for that. So I think it's work out very well for the employees, very well for the leadership team, and very well for the customers.
So mind over heart and progress in the end, no doubt. If I could very quickly move on to you, Kris. Now, the deal was made 53% stake at around 220.73 rupees per share. Now, are you expecting the same share price to be retained as far as the open offer is concerned?
Yes, we are. The open offer will be based on the same terms. The getting up to 74.9% will be based on the same share price that we have offered for the selling promoter shares.
But a few of our analysts have said that at this price, 220.73, a lot of investors may not be in a position to tender, and they might be expecting the share price to go up. In that case, can we expect some revision on the share price?
Our expectation is that we will continue to run a publicly listed company in India. We absolutely will, from a go-to-market perspective, make sure that we derive the benefits of both the banking and financial services from Virtusa, as well as the banking and financial services from Polaris. So from a go-to-market perspective, it actually helps us reach different clients, provide more end-to-end services, be able to go in there and expand our addressable market, pursue larger deals. So we have no intention of rushing through anything. We're very comfortable with running two public listed companies and the benefits that we accrue by running two publicly listed companies, one in North America and one right here in India.
Okay, so that's the word coming in from Polaris.